Well, it took more than a year, but stocks are at new highs again. Today, the blue chip Dow index followed the S&P 500 into record territory. All those obstacles like Brexit slowing global growth, they're on the back burner for now. Japan hinted at more stimulus, oil prices rose, energy stocks followed, and investors regained their appetite for risk for at least this day. The Dow Jones Industrial Average gained 120 points to 18,347. The Nasdaq added 34, a new high for the year, and the S&P 500 rose nearly 15.
So what happens if you factor in dividends in this year's returns? Bob Pisani has some more positive news for investors.
The S&P is at a new high, but it has been there really all year if you include dividend gains of roughly 2.2%. The S&P 500 has hit record highs 10 times in 2016 once you factor in those dividends. How important is this whole dividend game? They account for half of the S&P's total returns over long periods of time. So since 1988, the S&P 500 is up about 720%. The total return for the S&P 500, which includes reinvested dividends, has gained over 1,400%. Now think about this. Your actual returns on owning the S&P 500 are twice what the price index indicates since 1988 if you reinvested the dividends. So smart investors have known this for a very long time. In fact, ETFs that are dividend weighted have been hitting historic highs this week as well, like the O Shares Dividend ETF. The symbol is OUSA. They invest in quality stocks that pay dividends. The biggest holdings are Johnson & Johnson, Exxon, Verizon, AT&T, and Microsoft. The current yield is 4.25%. So here's the bottom line. The major indices may be at new highs, but since dividends are such an important part of total returns, don't expect investors to immediately abandon high dividend stocks for other riskier parts of the market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.